So the question is, how low can they go? And my answer is, all right, welcome to Talking Investing. I am Tom, and as always, this is not financial advice. Today, I want to talk about Palantir Technologies, stock ticker PLTR. This one's a little bit bigger than the companies that we usually cover, but this is a high growth company, and they reported earnings, and there's an awful lot swirling around about them this week. So I wanted to cover what I think is going on and whether or not there's an opportunity here to potentially trade into this stock. So if you're new to the channel, please subscribe and hit the notification button. And of course, if you enjoy this video, please smash the like button and feel free to drop a comment below with any of your thoughts. Palantir reported earnings this week, and that was one big event, and their stock had a massive reaction to it, so I want to go through that. Cathie Wood, of course, we have to talk about her. She sold some Palantir, and everybody's making a very big deal out of that. I want to go through and see what that really looks like. And then I want to go through their earnings report, most importantly, and see what's actually happening with the company. And we'll finish up by taking a quick look at the chart and see where we may be going from here. So I'm going to start by just showing Palantir closed at $11.02 on Friday. You'll see that the day's range was $10.57 on the low. That is also the 52-week range. So Palantir has hit a 52-week low, and this has been a trend with them. However, it's accelerated over the past 2 days. However, that still does leave them with a market cap of $22 billion. So like I said, that is bigger than most of the companies that we talk about on this channel. And the thing about a $22 billion market cap company, and actually the thing about all growth companies right now, is growth companies have been taking a beating. It seemed to be turning around for a little bit at the end of January and the beginning of February. But now it looks like it's reversing, and for some companies, the beating is continuing. So just because Palantir hit their 52-week low today does not mean that's going to be their low. They may continue to go down. But what I want to decide is, are these buying opportunities, or is this falling knife situation? So let's look at how the market digested these earnings reports. This is from Investors Business Daily. Palantir stock plunges as earnings miss, revenue outlook edges by estimates. Palantir earnings for the 3 months ended December 31st were 2 cents per share on an adjusted basis. Revenue jumped 34% to $433 million. Meanwhile, analysts expected Palantir's earnings of 4 cents a share on revenue of $418 million. So analysts were expecting earnings of 4 cents a share. They got 2 cents a share. They were expecting revenue of $418 million. They got $433 million. I'll tell you, my initial knee-jerk reaction is every time a growth company beats on revenue, I do not get too concerned if they're missing on earnings. Particularly, they did earn 2 cents a share. This company is actually earning money. They're actually cash flow positive from operations. And in my opinion, this is still a pretty early stage growth company. I think you're going to see from the number of customers they have and their potential total addressable market, there is a potentially a long way to go for this company. So I feel like, I'll just tell you right now, I feel like this was a massive overreaction. And I'm going to go through the numbers and tell you why. This letter is from Alexander Karp. There was a few key things that he said in this, in my opinion, that I take away as a shift in what they're doing going forward. So he says, we founded this company to build software for defense and intelligence agencies whose budgets were larger than the economies of some countries. So I believe this is a key part of their business, and it will remain a key part of their business. However, I do believe they're making a philosophical shift here in order to grow their business. And I think what they're saying makes sense to me. Our business has changed since then. We have grown significantly over the past 2 decades and helped to create an entire category of software development, one whose full potential we believe is still becoming apparent. So he's still saying they're an early stage company. More importantly, he goes on to say, every large organization in every industry and sector in the world is becoming a software company, willingly or otherwise. There are no goods or services or government today without software. This is your total addressable market that he's talking about right here. Basically, he's saying, we built this company on defense and intelligence agencies, government agencies, but our software has evolved and they have new software that increases their market to, in their words, every large organization in every industry and sector in the world. So you can see the growth potential. And when you see how few customers they have right now, you'll realize just how much potential growth there is in this company. Q4 2021 highlights. I'm just going to hit a few of the highlights from this, and then I want to go into their presentation. Total revenue grew 34% year over year to $433 million. So 34% growth on revenue. Commercial revenue grew 47% year over year. So that's going to be a key number, and I'm going to talk more about that later. U.S. commercial revenue grew 132% year over year. Now, government revenue grew 26% year over year. That was a small number versus what they've been doing in the past. However, as you can see in the letter from the chief executive officer, they built this company and they have a foundation of government business. They're keeping that business. 26% growth, that means they're still growing that business, but it's not the big piece of this company. Where their future lies is, as they said, in every business in every sector. The commercial side of the business, they are expecting to be multiples bigger than the government side of their business. Although the government side has been a core key element of them starting and growing their business, and I think they'll retain that business. It will just grow more slowly. At some point, you've gotten all the government clients you can get. You'll see they're maximizing their revenue per client, so that's one of the ways they'll continue to have smaller growth there. But on the other side, on the commercial side, I think we're going to see some big numbers. Okay, so for fiscal year 2021 highlights, not just the fourth quarter, for the year, total revenue grew 41% year over year to $1.54 billion. Revenue grew 53%, so at a little bit faster pace than their overall revenue, and that was $879 million. Now, these are the numbers that are going to be a little misleading, and I'm going to dig in and show you why. Commercial revenue grew 34% year over year to $645 million. Government revenue grew 47% to $897 million. It would look, based on these highlights, that the government business is bigger than the commercial business, and it's growing faster than the commercial business. I mean, that is what this says, but when we break down the numbers, you're going to see it's trending very much in the opposite direction. So on an annual basis, this is true. However, the trend is heading in the complete opposite direction. Commercial customer count tripled to 147 customers year over year. So they have 90 government customers, and they have now tripled their commercial customers to 147. Now, you're going to see how this company works. When you see how they've monetized their government customers over the years, I think you'll get some insight into what they're planning to do with this massive growth in commercial customers. All right, this is their financial presentation for the Q4 earnings. Fiscal year 2021 business update. I just want to hit a few things in here. Q4 results, year over year growth and margins. So when we look at Q4, total revenue growth was 34%. Government revenue growth was 26%. Commercial revenue growth was 47%. So you can see in the fourth quarter, it is the commercial side of the business growth that is accelerating, and the government side is still increasing, but it's increasing at a decreasing rate. Focus on customer growth. So you'll see they had 139 customers in 2020. They're up 71% in total to 237 customers. But let's look at the breakdown. Okay, commercial business. So in Q1, their commercial side of the business grew 19%. In Q2 of 2021, it grew 28%. In Q3, 37%. And in Q4, 47%. So you can see this is a very clear trajectory. They are increasing their commercial side of the business at a much faster pace than their government side of the business. And that doesn't mean the government side isn't important. It's a core part of their business. It's actually still a little bit bigger than the commercial side. However, the commercial side has the potential to be multiples bigger than the government side, which means this company has the potential to grow their revenue by many multiples, in my opinion. So their commercial customers went from 49 in 2020 up 200% to 147 in 2021. Okay, so if we look at the government side of the business, you'll see the exact opposite. They were at 76%, down to 66%, down to 34%, down to 26%. It's important to remember this still represents growth. They're still growing this side of the business at 26%. So that's still a high growth company even in this sector that has matured. government trailing 12-month revenue per customer. You'll see that over the years, so as they acquire new customers, in 2018 they were getting revenue of 3.1 per customer. That increased to 4.2 and then to 6.8 and then jumped to 10 this year in 2021. So they're maximizing revenue per customer. This is their long-term growth strategy. So with all of this, on their commercial side, as they've tripled their customers, they'll probably follow some kind of growth pattern from a revenue per customer standpoint, just like this on the commercial side over the next 4 or 5 years. I'm just going to touch on this very quickly because I know Cathie Wood tends to have a very big influence on the market, and sometimes it's misleading, the information that's put out there. So this is an article on Benzinga. Cathie Wood dumps $56 million in Palantir shares after dismal earnings. If you look more closely, you'll see the popular investment management firm sold 4.77 million shares, estimated to be worth $56 million. Okay, so they sold 4.77 million shares. ARK Investment held 30.48 million shares of Palantir prior to Thursday's trade, implying it trimmed nearly 16% of its total stake. So this Cathie Wood dumps after dismal earnings. They did trim back their position. They trimmed it back by 16%. She talked about why. I'm not going to speak on her behalf, but this is not some seismic change in what the ARK investment funds are doing. If you go look at Palantir's top institutional holders, you'll see ARK Investment was number 3. With this sale, they're now number 4. So they're still the 4th biggest investor in Palantir out of any institution in the world. So it's not like they fire sale dumped this and have abandoned ship. I think it's just important to put that in perspective. So with all that said, I'm going to be fairly brief talking about the chart itself because the price action on this has plummeted. It is at a 52-week low, as you can see on this chart down here. It gapped down on Thursday and then continued down on Friday. This is the Palantir chart on the daily time frame, so each one of these candles is 1 day. So Palantir was the IT stock back in January of 2021, so just a little over 1 year ago. This thing ballooned up to $44.83 a share. So probably overbought at that point at that time. But it quickly pulled back to a more reasonable level, somewhere in the $27 range. That was in March. Subsequently, since November, we all know the second half of November and December and January of 2022 has been a nightmare for high growth companies. And you'll see it's no different. Palantir was not immune from that. This stock basically went down in a straight line for 2.5 months. Now with this earnings report, they've gapped lower to a new 52-week low. So the question is, how low can they go? And my answer is, there doesn't seem to be any line of support necessarily. You can see they were cascading downwards. We had a little upward momentum for a few weeks in the high growth stocks, but then boom, just on earnings, it took all of that back and then some to hit a new lower low. So my feeling on Palantir is we don't know where the bottom is. In the short term, this stock has some massive downward momentum. The stock market has some massive downward momentum. So this stock could continue to drop. In fact, I expect that it will. However, I am considering starting to dollar cost average into this stock. I don't own this company yet. I've been watching it for a year. It has finally gotten to a place where I think it's very, very close to a good spot to start dollar cost averaging into it. So this is bottoming out. It's probably, as much as it was overbought a year ago, it's probably now oversold, and it may continue to even sell off more. So again, I have not bought this stock yet, but I am very much considering if there's some red days next week, I will likely buy an opening position in this stock. So please do your own due diligence and make your own decision. Thanks so much for watching, and we will see you in the next video.